Hey guys, come out of your stare, please.
Namaste.
Namaste.
Oh, Pat, good morning.
Yes, please don't go. Please don't go. Namaste.
Woo. Out of
Woo! All right, guys.
hibernation. Those
Yep.
bears, those perma bears. Ooh.
No, no,
Getting burned.
you're not. We have charts to follow now. We don't just go off of news releases.
All right.
So we were staring because of all the news that Royce is running down with this let's just say episode, and we can't talk about it, but man, pretty awesome stuff. And how's that for a teaser for however long we're going to keep it a secret?
Right. Forever.
All right. We're going to buy a station suit. No, I'm just kidding. All right, here we go. Let's talk about, let's go ahead and introduce everybody. I'm Darin up here, top left corner, and barely made it today. And top right
Yes,
is
you did.
Daniel Hopwood. He's not blurring out his background. He's proud of it this week. Bottom left is Josh, JP Morgan. And there he is. And we said that he's in that, he's like in that wealthy neighborhood. So he talks about wealthy things. Look at that shirt, that background. And if you can see outside. Anyway, let's move on. Bottom right, we've got Quanticus Maximus and the inventor of 1,000 programs, which, wow. It's amazing he has time to even do this show, honestly.
Sometimes, some days. Oh, I got to take off the hat. Wrong. I'm representing the wrong company. Hold on. All right, here we go.
Wait a minute, the wrong company? We don't represent both?
Arbitrage trade. This is after
Yeah,
the
this-
bell.
Totally
We
different.
don't represent both? Okay. There's a wall
Nope,
between
can't represent
us and
both.
that hat.
Can't mix the LLCs.
Can't mix.
There's
Yep. No commingling,
No
sir.
commingling.
No commingling.
That is true. That is true. There is a paywall between here and there,
Yes.
quite literally. All right. I got to do the disclaimer, though, as if we didn't just do disclaimers. We are not financial advisors, right? And this is not financial advice. It's just opinions. And this information is solely for educational and entertainment purposes only. And if you do want to do that kind of thing, invest, please make sure you consult an investment professional before making any financial decisions. All right. So
You sure it's just opinions? Josh keeps winning.
it's an opinion depending on how confident your face looks when you say it. No, I'm just kidding. Yeah, he looks like he owns the world. It's behind him in a cage.
Not
He's
yet.
sitting on Mars somewhere. He's just
Right.
telecasting back.
That's right. He and Elon. Elon's on the other side of the table from where he is.
I got Elon locked in the trunk.
Just landed. Oh, nice. All right, so let's run down the numbers here. Dow Jones, S&P, NASDAQ all up. That's why you see all green behind me. They are at, Dow is up just barely. S&P up 0.34, and NASDAQ was the winner at 0.42 up. And let's go. I think I saw Bitcoin. I think you just pulled it up, so it's at 117, so we don't have to talk about that one. Although, what was the highest it's been? 120 something? Anybody know?
123, but it dipped down to 108 recently,
Right. So now it's
the last week.
it's marching its way back up there with gold and silver, which it's pulled back a little bit in those commodities. Let me pull it up. We got gold was up 0.5%. Silver was up 1.67% today. And again, that's just today, not for the week since the last time we talked about it. And the bonds are also, I believe, up today. Nope, actually a little bit down. So the 10-year is down basically flat, but 0.04. I think I covered it all. So tell me, please, I'm going to let you introduce this next one here, Daniel, since you said I eat my hat. So please don't eat a business and loan hat, but please tell us what you mean by I eat my hat. I've heard of, edible. Well, I can't talk about it here. Never heard of
There goes that rating again. Go ahead, drop the F-bomb. Somebody do it.
I think Darin has got a shadow band. All right. So but before we move on real quick, I think we have to acknowledge the fact that gold hit 3,920. I mean, it's just been on an absolute tear.
Yep.
It's blown through levels that I personally just had marked on a chart that I didn't think it would go through. And I think it's, we sometimes talk about like the bigger macro picture and inflation and like de-dollarization. And I think this is, kind of one of those key indicators that when you look at, the amount of gold that banks are holding and like the amount of inflows of gold into China and whatnot is, really just kind of like an impressive thing that this, commodity, in my opinion, is running so hot that it's kind of a tell of the way things are going. So I think we gotta just acknowledge how crazy that one is going. That being said, maybe Royce can talk about it later.
I can.
It's got to pull back soon.
Okay,
right?
so
like
you're saying you eat your hat because you wouldn't have seen this happening. Is that what you're saying?
No. I'll eat my hat on being wrong in the market in a second.
I guess
the gold has been so impressive lately, especially because we haven't done this.
So is silver though. Have you seen the silver chart lately?
No, but I'll look at it. I mean, yeah, it's pretty much the same chart of
exactly
right through the levels of where I thought it was going to be.
Well, it's been lagging behind gold, but it's definitely catching up.
Yeah. Yep. That's where the money you pull it when you think gold's at the top, then you pull it off and put it as silver the rest of the way up. You just ride them both up, and then I mean, Royce, would you
guys know why?
Go ahead.
Anybody know why?
Tell us more.
Because of the dollar.
No.
Because they're going to go back to the gold standard.
It's close.
China wants to create a gold back.
I'm just saying I've heard that rumor.
So all the BRICS countries have been buying up all the free market gold.
Yep.
And because scarcity drives up the price, that's why you see gold at this level. They are positioning themselves potentially to rebase on another currency, whether it's a cryptocurrency, whether it's a gold standard. BRICS are all in and basically playing chicken with the dollar.
Yep.
So I don't know if you guys saw this, but allegedly the U.S. gold reserves are worth 11 trillion, assuming Fort Knox has all the gold still and blah blah blah.
Yeah, that's right.
But if that is the case, like, I'm not saying we'll back the dollar by gold again, right? Like, I don't think that's going to happen. But it'd be pretty crazy if like they were to actually revalue the gold and we were to see how much we have versus, a potential collective BRICS currency, because that does moderately destabilize that idea of like, oh, actually the US does have something somewhat, to back it, golds and, F-22 Raptors.
That's the rumor, is that's how we're going to get out of this debt. This big debt that we have is to go back to the gold standard. That's crazy to hear and understand, and walk me through it, please.
That's been the rumor. Okay, we give up. We're gonna trade that for gold, or I would assume the debt that's still owed right now. It's based in dollars. Are they going to convert that to being in ounces of gold, basically with the gold prices, and then basically overpopulate?
I don't know how.
You can't just erase the dollar.
Aren't treasuries involved in that kind of thing, or no?
Not usually. Typically, how it works is the central banks control everything. They keep so much money on hand, and basically call something called Nostros accounts. Nostros accounts is basically like, for example, the UK central bank will hold euros as their primary reserve currency, but they'll also have an account that's all in US dollars, or all in British pounds, or all in Australian dollars or New Zealand dollars. So they have a Nostros account for each one of the currencies. And basically, as people turn in one for the other, they can actually see where the shifts in the valuation are going. And then they talk to the other central banks to say, hey, I need so much of this, I need so much of that. And they basically swap overnight, every night.
Yep. I want to say that those accounts were actually talked about in that piece as it possibly going back to the gold standard. I don't know. I didn't read enough of it to actually bring it up, but I did anyway. So, Josh, you had a few points here that you brought in, that this is looking a lot like 2009.
Well, I mean, I was going to after Daniel was talking about eating his hat, that's where I was going to.
Oh, yeah, I can eat my hat real quick. So,
Go ahead.
So eating my hat is, To be fair, I didn't necessarily say like we were going to have a bad September or anything, but I did talk about in the beginning of September that September is historically the worst month for the markets, right? Seasonality, it normally is down. I think it was like 4 or 5%. And this September was the best September we've had in 15 years, up 4%. When obviously historically it's down 4%, and the S&P has gained 20% in the last 100 days, which is pretty incredible. Amazing. right? So we just had to acknowledge, as while my positioning in the market is not bearish, we have been somewhat bearish on this podcast, waiting for the downturn. So I just felt it was necessary to eat my hat in the sense of bringing the bearish news, and still the market just running hot.
Yeah. Did I not say a month ago where a new bull market was beginning?
You did.
Did I not?
Oh, you did, and trust me, I'm positioned for one. I'm just saying I bring the bearish facts because they're more interesting.
So you're saying you're becoming more like Kramer? Is that what I'm hearing?
Well, I don't know how Kramer's positioned.
Wherever he's positioned, it's always the opposite of what he says, though.
Probably.
That's right.
I'd imagine. I'd hope so for his sake.
Right.
But I mean, I guess
Inverse
the point
Kramer.
the point that I was going to make is that it's easy to kind of look around and say that and assume that that it's doom and gloom. You assume that we're going to repeat the same historical things that we have repeated for every typical year. And I'm probably the worst of it. I'm stuck in my bearish bubble, and I assume I'm literally just like making the gesture of just like look around, like things are obviously bad. Like we are obviously going to have a bad September. Like there's no way that everything can be roses. But it's the one thing that I really and Royce, like Chuck told me this years ago, is that you can't really look at the S&P and gauge that as like the actual economy, because the market and the economy are not necessarily the same thing. And so so you look around and think of like, okay, people are struggling to afford things, and we're having, people are having like payment issues, and like the debt is driving up, and we're discussing like housing, people are missing payments on their houses and things like that. But that's only going to affect the market marginally. What we're experiencing now is this AI. I mean, you got to think about like there's, I think of the S&P 500, 35-ish% of it is AI related stocks. It's Nvidia. It's Nvidia. Like you've got Oracle. You've got all of these AI related stocks. They're literally, Nvidia is obviously the biggest one, but they're just kind of propping it up because those are going to continue to rise. Us paying, higher prices for groceries has no effect on what their bottom line is. And so that's why I kind of think there's that disconnect. And that's why I liken it back to, like a 2009, if you go back to after the great financial crash and you look at everything is struggling, there were foreclosures, people were having job losses, and we're currently seeing a softening job market and things like that. And people are struggling to pay for things, and people are foreclosing, and they're losing everything. And yet the market is not, because they're not looking at what's happening right now. They're looking at what's going to happen in the future. They're 6-12 months ahead. And so they're banking it on what we're experiencing now. We're like, okay, well, yeah, we've got AI boom. AI has nothing to do with what you and I are spending for things. And that's going to continue to prop up the market. So essentially it's just going to kind of, we'll talk about this again later. It's just kind of push that bubble down the road. And so, to your point, and it's one of the things that really I hate to admit is that, we could really actually be on a continuation of this bull market, because if you're looking at the market versus the economy, they're two different things. The market can continue on and the economy can be sluggish, and those two things can coexist.
Well, there are typically 2 or 3 things that I look at when I'm trying to gauge what the market is doing versus what the economy is doing. Always look at construction first, because if you're not building, than basically the economy and the cost it costs to buy the materials to build. With all of the influx of all the data centers that are having to be built, that's causing all construction workers in those areas to find new jobs and not be unemployed, right? And then basically it's covering blue collar, and then it's extending itself up because they're then teaching at the universities, trade schools and stuff. Now someone's going to have to maintain these data centers. And then they're going to have basically for the people who are making six figures or so that are in IT, they're going to be network jobs. There's going to be database jobs. There's going to be IT infrastructure. There's still going to be management. You're still going to need project managers. All the things that basically, that basically all of these, the 8% of the market that is tech and is represented by tech, it's basically causing it to trickle down, but it's not trickling down fast enough for anyone that's not in that. So you will see potentially a slump in like real estate. You'll see a slump, and because it's not real estate that's taking off, it's these data centers. That's not regular houses. But eventually, as they create these new jobs in these locations for these new workers, people are going to migrate to wherever they are, which will then cause there need to be a shortage of housing, and then you'll see the uptick of real estate. So
it kind of sounds like, and I think we might have talked about this the last time we were on, it's really going to be a tale of like two economies, right? The people who get affected by the trickle down of AI versus the people that don't, right? Because my counterpoint to you, Royce, would be like, it's like, what is it, 18 to 24-year-olds have like the highest unemployment rate they've had since like 2008 or something. And I'm not necessarily saying that as like a 2008 like parallel, like that's going to happen again kind of thing. But it's like, you're talking about all these construction workers that are like going to get jobs, and how they'll trickle down. But then there's this other part of like college grads that like aren't getting jobs. And so it's kind of like, I think to Josh's point is like, where I think like you're kind of wrong is like, you are correct. We don't like exactly repeat our prior situations, but we are human and we do repeat the same psychology, right? So we could be in a situation where we have this huge build out of AI, and it might last like 8 years, like who knows, but anytime you have these huge build outs, and once they start financing it on debt, that's when you have to start looking at of when does like the chicken come home to roost, because it's the exact thing that happened in 2000, right? They built out all this infrastructure for the internet. It was going to change everything. And then it was kind of like, wait, there's no real market for this. And if you look at AI right now, while it is super important, and I think this will be like foundational change, like similar to the internet, it's like you look at a lot of these businesses reporting back of like, it's not really doing too much for them.
Well, I honestly think that the 2000 crash had nothing to do with it not being the idea was good, because all they did was rebrand .com to cloud about 8 to 10 years later, right? It was that they didn't have the network infrastructure in place to support everyone going there. So consequently, it couldn't get its legs up under. So .com, basically, we still are definitely using the internet. There's still tons of websites out there. Companies like Wix and whatever did come after all of that. And basically everyone is still moving to the cloud, but we had to have the proper tenants in place to be able to support the bandwidth and the utility to be able to support it. If it's not there, it won't stand. That's why I think in this iteration of it, as we're building out AI, I do think that more care and more planning is going into it. And as long as we find the companies that have genuine AI benefits to humans, then those companies will survive. Now, all of those, ICANN has, cheeseburger websites that, from the early 2000s that basically went away. Yeah, if they have no practical use, if they're just mimicking, if they're just using ChatGPT under the cover and they have no actual real value, yeah, you will see a bubble burst for those people, but for the actual AI companies that are actually teaching AI and actually making it where it can be not only useful, it's basically you almost can't live without it. Those will more than survive. I saw something today that said they're expecting OpenAI to be one of the first $1 trillion companies in the next 5 to 10 years.
So
they're
I'll
involved in all the
agree.
different things right now.
So I'll agree with all of that. My only maybe pushback or thing to explore would be, so you talk about how in 2000 the issue was that there kind of lacked like the network infrastructure to like really make the internet a thing. And from what I understand is if you were to turn on all the planned data centers that are currently being built all at once, the US energy grid would need 3 times the power it currently outputs. And it currently takes like 8 to 10 years to build a nuclear site, which is really the only plausible way for us to get the energy, let alone having the grid to be able to handle that. So I think
that point at all right now. Nope.
Sorry?
Can't talk to that point at all.
Okay. All right. I mean, can you talk to it hypothetically?
Hypothetically, you don't have to go nuclear. You don't have to go nuclear. Just think microgrids. Give municipalities other options besides just the power companies, and giving them those options basically might allow the technology as well as the power to do that. So right now we have
where does the power come from?
We have gas lines all over the U.S. So microgrids ran off of gas power could be definitely. It doesn't have to be nuclear. Natural gas is prevalent everywhere.
Yep.
I know nothing about that, so I'll take
just
that
energy
as
in
a
general
solid argument.
Yeah, in general.
Utilize the energy sources that are available now until that becomes more available in 10 years. So, and we have to, because we can't wait, because China's all over it. So we got to somehow catch up here in the U.S. And because that is a mandate really from the Trump administration, is to be number one in this. And the Congress has already passed all the stuff as far as how much money's out there that's not spent yet, which we've talked about in After the Bell before. So that alone is helping keep the economy up per se, but it's not only just a wealth gap we have here, but it's also a AI economy gap, if you will, versus the rest of the economies. Now, energy, of course, is going to start moving back up again, which I've noticed a lot of stocks are starting to move up that are in the energy world. But I mean, if we're honest, everything's been pushed forward again. The tariffs themselves have pushed forward the stock market because all of these companies who normally would have had terrible earnings reports were boosted. Think of all of retail. They were boosted because everybody bought ahead of time. And so now they're sitting on all this stuff, and that's all going to eventually catch up and hit, especially if they have to start selling it off cheaper because they have to get rid of the merchandise. So that's one of the things that could be a problem later on. But in my opinion, those tariffs actually were the next thing, just like they've been doing, to push a crash forward. And I'm not going to do it now. So those tariffs are just pushing it more months and months ahead to a later time. I think there's talk now about October, of course, about it's not going to be just the Halloween scary month. It might be the scary month in the markets, but we keep saying that. I mean, I started in June, right? Remember, I was the June guy. But that was then the tariffs came out, which in my opinion kept all of the ERs at or better than what was expected. And eventually that's going to catch up. So just that, and then everybody pushed it to September, right? We all talked about September. That's when the rest of you guys said September. So now everybody's saying October. Who knows? And it's like Josh. I'm not frustrated by it. It's just the math doesn't math, and the charts don't line up to what should be happening.
I'll give the charts maybe, but the math definitely does math.
Well, yeah.
I'm just saying.
We don't care. We just care about the charts.
Physics doesn't lie. That's right. I use physics, and it doesn't lie. These are laws of physics for a reason.
Yep. I just have to represent the news cycle and the other
the apes. Got it.
Other opinion cycles. Yes, because we're all wrong if you think about it. We talked about September. We talked about June. We were all wrong about.
Oh no, I said it was bullish September. Did you
predict? No, but earlier in the year though. Earlier in the year, all of us said September, and now it's. I mean, I just think everything's still getting pushed forward by different things, different planned out events to push it forward, and eventually we'll have to pay the piper. But who knows? It could be 2026. Who knows? In January. That's the second.
If I had to throw out a random date.
Yeah.
Never mind.
You don't throw out random dates.
You say a month. You say your favorite month. You know.
Yeah. That's right.
Somewhere around 2027. That's all I got.
That would make sense, especially
there's 12 months in that year.
There are.
All right, let's move on. Let's talk about the crypto cycle. Daniel wants to know if we are starting over. If this is a new, I guess, just like a new bull market, what are we doing here in crypto? What do you guys say about that, Daniel?
This was a lot more interesting when Bitcoin was down like 10%,
right?
Or whatever it was. And then it went back up to a regular price. And it's like, well, I don't know how relevant this is. But I did think it was interesting that Grayscale launched the first kind of what I would call index tracking ETF. So they launched a ETF that tracks the top 5 cryptos according to the market cap on, I believe from CoinDesk. So it tracks or holds Bitcoin, Ethereum, XRP, Solana, and Cardano. And
big for XRP, right?
I mean, it's good for all of those, right? So
I think it's the first XRP though, right? The first ETF with XRP in it.
Yeah, I don't believe.
There was an XRP specific ETF that released like 3 months ago.
Okay, all right.
Oh, really?
Maybe it's the first big one. I don't know.
Well, I mean, Grayscale was the first one to do the trust holding Bitcoin before you could do the ETF approval. So they kind of jumped all over this one. I do find it rather funny, though, if you look at the allocations of this. It's 70% Bitcoin, 17% Ethereum, and then the rest is distributed to the others. So it's like actually a very small percentage given to the other coins, which just shows you the dominance of Bitcoin and Ethereum when it comes to the market. And not to say that won't change over time, but just looking at how dominant those two are currently. And long story short, I was going to talk about how there's a bunch of liquidation, but we're back to where we were before. So that's all irrelevant. And you guys wanted to, maybe Royce can talk about on his seminar, he had talked about, more probability for MSTR to have an upside in the future, and, wanted to hear his opinion on, where we might be standing in this current
over the last few
cycle.
Days?
What?
Have you seen what it's done over the last few days?
I mean, I imagine because been looking at yeah, it's coming back to a level that I was looking at.
Yeah. So it has moved $40 over a 10% return in the last 5 days. So, I mean, 4 days ago, I said it was going to, and it's been 5 days since. So, yeah, it's doing exactly what it's supposed to do. I honestly think that crypto is in another bull market as well. And typically crypto rises at the end of October. So this might be the beginning of that rise. It's starting early in October. I guess not really early. It's the first day of October now. So yeah, let's see where Halloween gets to. The only thing scary is how high will it go before we get to the end.
Yep.
I like that kind of scary.
Right?
So you no longer have 40K on your radar or 60K for Bitcoin, Royce?
I personally don't play Bitcoin. I do have a large portion in another cryptocurrency since I left Bitcoin, and it is definitely outperforming Bitcoin by far.
Yeah, speaking of that, that's a lot of these companies, especially the ones that are, and this kind of reminds you of the GFC. is these treasuries that people are doing. You have a company that sells tennis shoes, and then they come out with the fact they're going to have a treasury of crypto, and all of a sudden they go from $2 to $30. And those are the ones that are just absolutely ridiculous. I mean, it's like, if you want to get a pump and dump, just make sure you say, I'm about to do a treasury for crypto.
We have a treasury.
No. There you go. That's right. Are you listening, algorithms? No. But that's just the newest trick. I mean, it used to be, if you're involved in somehow in whatever's hot, just back in the .com and the other things we've had, all you had to do was just say, now I've got a treasury, and all of a sudden that's going to save every one of these companies that was going to go belly up. But now that they're doing that, they get a quick raise. So it'll be interesting to see what happens with all of those. It'd be nice to have just a list of all those that are not typically a financial entity, but they all of a sudden are jumping into being a treasury for crypto. Funny. I like to see where they're connected to.
I can't talk about that either.
No. There's a lot we can't talk. All right, that's the end of the show. We have nothing else to talk about. All right, hey Josh, save us. Tell us what.
You're not supposed to push all the buttons deliberately.
Poke.
I will say, hypothetically, it's a smart move. Anytime you open up a business, period, you're supposed to have a reserve. Period. You're supposed to have a line of credit. Period. You're supposed to be investing in your company at all times. So the fact that we're getting back to old school investing, where they're like, hey, don't just rely on ourselves. They used to invest in gold. They used to invest in pensions. They used to invest in all of these things. So the fact that they're building these reserves and they're building it into their business models, yeah, that will definitely cause their value, and it should cause their value to go up, because they are actually being good stewards of their money.
Yeah, it's the only reason probably GME is. Yep. I'm just saying, it's the only reason probably GME is still alive is because of that, is investing in the crypto. So I'm just going to make some apes mad out there. Let's go. I can make my own mad. So Josh,
throw a brick at your car.
That's right. At least it's not poop. Hey, Josh, speaking of an ape, talk to me about JPal. I mean, I can't, because I get all red in the face and stuff. But I'll let you, in a much more civil way, talk about JPal.
Well, I mean, I guess Daniel was going to start out by saying, he doesn't really want Powell's job. And I mean, I certainly don't either. And I mean, the current geopolitical climate has not made anything any easier. But I mean, if we're talking about specifically inflation data and like where we think we're going, like Daniel had kind of laid out, where do we see this? Where would we see all of this going? Like, are we, JPal's got, there's kind of three different outcomes for how this is going to end up. Are we going to end up in some massive job loss, high unemployment that's going to lead into a steep recession? Are we going to get that, sticky inflation, stagflation? Are we going to get the golden soft landing that everybody hopes is where it's going to end up?
About that again.
Daniel wrote it. I'm just going to read it.
You mean no landing?
Hey, they're still pitching it as an option. Okay, I'm not saying that's a choice I would pick.
They've been talking about no landing for years too.
The funny thing is, like, if you actually look at what the talking heads are saying, they're still steering you in the direction of the soft landing being the most probable outcome. Now, that could be because they genuinely believe it, or they could be because they're just wanting to kind of steer market sentiment in that direction so that nobody panics, and that we actually do have the possibility of a soft landing coming. But I mean, the thing that bothers me the most is that so much of this depends on inflation data. Like that's really going to be the one number that I think is going to make or break, because you've got the weakening job market already. You've got like unemployment's creeping up. You've got inflation data is still climbing, but we don't still fully have the picture. We don't still fully understand what the impacts of tariffs are on the market. And now with the government shutdown and the potential of not reporting, for 6 months to a year, depending on how quick that's going to roll out, and God knows what's going to happen. The decisions that are going to be made behind closed doors now that the government has shut down, next couple of days are going to be interesting. But I'm just, if you're asking me, I'm going to be crazy and tell you that I still think soft landing is actually on the table. And I still think that it's going to be something that really could potentially happen if Powell does his own thing. Again, this is all depending on inflation data, not to beat a dead horse, but I still think that if we get, one, maybe two, I think one rate cut's probable, 2 rate cuts, not as likely, but I think Powell, I'm going to trust in Powell. He can steer, give us that soft landing or the golden parachute, whatever we call it. And I think that's my vote. But I don't know what you guys, what say you?
Did you actually say trust in Powell? Did you say that?
I think I just threw up in my mouth.
I don't know. I must be having, what is it, Stockholm syndrome from having to talk about him for so long. Like
we
for
have,
some, like 2 years now we've been doing this, and it seems like every single time it's, hey, what are we, what are the numbers? What are interest rates? Like, what's Powell going to do? Like, I maybe I'm having PTSD or something, but in Powell we trust.
He pivots. Yeah, you said it. He has t-shirts coming out soon. But they pivot. They pivot from unemployment's the most important to interest or inflation's most important, and then whichever one's better. I think we'll flip to that being the most important. And right now it's unemployment, right? And the labor force. If you can even trust the BLS, leave out the L. That's that institution. If you really believe that, then they can adjust it to however they want. If they want to raise the interest rates, then you know what? I mean, if they want to do interest rate cuts, you know what? They're going to make that unemployment look good. And that's coming up, by the way. This week is a big week for stats. So by the end of the week, it'll be interesting to see where we are on Friday. So it's those are the 2 mandates. That's all they talk about. And how in the world can we keep inflation down? I just don't understand how. But
see, a lot of people misunderstand inflation.
I do like how you're talking about the BLS, like how we fired the old person. Now we get the new person. And then I don't know if anybody, because I did not see it until I actually dove into it, that last month's revision went from a positive 58 down to a 300,000 or 3,000 job loss. So between this month, the revision from last month, and then the job loss numbers from this month, we're now down 100-ish thousand in the job market. I mean, that's it just keeps compounding.
Yeah,
so
2 things.
It raises some red flags, but yeah, go ahead.
Yeah, you got the government. Government's where a lot of these employment rates look so good over the last we'll just say 6 years, just so nobody gets upset. But all of the employment numbers that were looking so good were built up through government and government jobs. So now here we go with this shutdown, and the Trump administration has already said in the dark of night they're going to get rid of a bunch of different agencies because they can. That during a shutdown, that's when you can do it, and that I guarantee they're going to do it. Plus, you've already had these that are just now going to start take effect. It's been in the news that this company or that company's cut 100,000 or whatever it might be. But now that it's actually happening, I'm talking about government, by the way, now that those are actually being taken, because when they first happened, they don't count on that report. Now they're going to start rolling through and be effective on that report. And then we'll see whoever the new person is, if they decide to actually say it or not, depending on what the agenda is for that report. There, I said it. Yes, Royce, you want to say something? I see it.
I got a lot to say. So a lot of people misunderstand how the actual interest rate works. Anytime they lower the interest rate, they are telling the people who are safe and who like safe bets, like banks that gives 3, 4, 5% interest, you're wasting your time. Your money should be in the market. So literally every single time they cut the interest rate, you see people who have money sitting on the sidelines rush to the market because they're not getting the returns that they need sitting in a bank. It's like a silent nod to say, hey, you're wasting your time over here, 3%. You're not even keeping up with inflation. Let's push it over here so that way you at least get a 10 or 15% return, or you have the chance to, right? And every time they raise the interest rate, they're literally telling people, hey, and go back to safety. Go back to safety because, hey, why take risk? You've already made all this money. Let it sit here, let things cool off, and then see what we do next.
Oh, and it goes back to my point that I was making earlier about you can push, like with this bubble, you can push it off further because every quarter point cut, it just gently nudges everyone who's got safe money parked into something that's more, back into the market. And so if you have more buyers continue to drive the price up.
Yep,
exactly.
Especially big money.
But the other thing that basically that I feel that we're playing chicken with right now is that you're putting deflationary currency against inflationary currency. The US dollar has historically gone up about 2.5% each year. That means whatever the dollar was worth, it's on paper, looks like it's worth about 2.5% more every single year. And that basically compounds over years. Where now they're basically taking cryptocurrency and saying, you know what, we're going to burn some. We're going to get rid of some. So that means for the people who are holding and stockpiling and starting to gather, and for the early adopters who've had crypto, they're noticing like, yeah, they keep burning it. So that means what I have is worth more money. So they're slowly accumulating wealth while the people who have for years, decades, almost a century, been accumulating the US dollar are thinking it's worth more, but it's actually worth less as people are migrating to a more deflationary, more stable currency. And that's how you'll de-seat the dollar. If you're trying to de-seat it, basically let it completely happen underneath the covers behind the scene. And when one day you'll wake up and they're like, yeah, that's obsolete. This is the new standard.
Yeah, I think eventually everybody else is going to go to digital, and we'll have to go to digital eventually. Still the dollar, though. It's just a digital dollar, right?
Hey,
yep.
Digital dollar, they burn too.
Yep. And you know
you
what?
Don't have to print anymore.
Yep. It doesn't matter what denominations you get rid of. There won't be any more. So save your coins. It could be worth something someday. There'll be relics. Josh.
Speaking of
let's
relics,
go, Daniel.
Darin, how are you doing?
What do you mean?
Oh, nothing. Carry on.
On what? Wait a minute, I didn't hear that. Will you go?
I called you a relic. It's okay.
Oh, thank you. Yes, I have the most. I've been around the longest.
You had to get at least one old joke.
I don't keep them in jars. I keep them in garbage buckets. Anyway, that's how old I am. All right, so let's go to Daniel. I'll let you introduce this one because you want to talk about quantum, which we talked about a little bit. Eventually, when quantum is all up and running, and however many years that is, speaking of 10 years, that's when the crypto is going to have to be a whole different ballgame because of passwords being absolutely easy to do. Go ahead and tell us what you have to say about quantum trading, though, Daniel.
Yes, so HSBC and IBM is probably kind of like, if you're not, into trading stocks, the biggest company that everyone kind of knows about that has a quantum computer. And they've been working with HSBC to look at how they can kind of better trade and price markets. And they just had a report that said HSBC was able to see a 34% improvement in predicting how bonds will trade at a given price in the European bond market. And that's pretty substantial, given this was like old data that they were like back testing with, and it was still partially using some classic methods. But it's kind of the first, at least to my knowledge, real world implication of quantum computing in the stock market. And I didn't know this at the time, but there's actually some validity behind the spike in these quantum computing stocks. So Bloomberg reported that the revenue of these quantum stocks has skyrocketed from 4 billion to 72 billion. So these companies are actually being used. Presumably, they're just outsourcing their computers to other companies that want to use them. And I think, if HSBC is using this, you can only imagine what a Citadel is trying to do with these kind of things. And so I actually wanted to get Royce's opinion on how this impacts not only markets, but retail traders like us.
Well, it basically makes the market makers, in my opinion, more efficient, because the more, the faster you can adjust to market moves, and with quantum computer, you can adjust pretty darn quick. You can basically also, technically, this is for the apes, manipulate the market.
Because they haven't up until now.
Nope, never.
Is it manipulation if you're just not following? So remember, arbitrage, we only follow the market. We don't try to predict which way it's going. Then that's the trap for most retail investors. They try to predict and they stick to their prediction and that direction. And most people, when they try not to be wrong, they wind up missing the ride. It's like, it said that's where we're going. That's where probability says it's going. That's where statistics says it's going. All right, just follow it once you have enough confirmations.
Or you have an insight, especially with a quantum computer, to know exactly what retail has just done and you front run it.
But quantum computer is not, so quantum computing is not listening to news. Quantum computer is not basically, they're literally just using math to figure out fast enough so it's not a proximity to the data feed. It's saying based on physics, based on math, based on statistics, based on everything that we see here, it physically can't go this fast. And if it does go this fast, how long does it have to maintain this speed to allow it to go even higher?
But that's what you already do.
That's my point.
Exactly. Quantum or not. That's what.
Are you buying a quantum computer?
Oh yeah.
And next news. Let's go to
Royce will put one in the basement in the refrigerator.
Well, he's got some weird eyes going on. Maybe we are getting into.
It's the pursed lips. When you see the pursed lips,
I said nothing.
No, you didn't. We just speculate.
You will. I can neither confirm nor deny.
We speculate over here. All right. So, OpenAI.
You remember pre-after the bell what I said. So think about that.
Yeah. So OpenAI bubble talk. We got to get moving here. OpenAI bubble talk. Let's get through that real quick so we can move on to fun things like not fun because Josh always wins. All right. So let's move on to the AI bubble talk. What do you got to say, everybody, real quick? Give me your elevator speech on AI bubble talk and if there is a bubble, if there's not. We sort of touched on it earlier, but I think Royce kind of said, if I'm gonna summarize here right, that the companies that are the main players, there's no bubble. It's about everybody else that's around them. So it's .com part 2. So what do you want to add to that, Josh?
That is not what I said.
No, .com, but .com, only the strong players actually that really had something to do with it and didn't make stuff up were the ones that made it through that. And
that's not what I said either.
They didn't say anything about
the people willing to follow win. So that means while everyone, it's scare tactics. Everyone that's scared to enter into the market, they basically put it's a bubble, you're going to lose your money. And that keeps a lot of people on the sidelines.
Right.
And as long as they're sitting on the sidelines, it continues to rise. It's when my grandmother or my mother-in-law says, I'm going to go buy some Bitcoin. That's when everyone should run.
Right.
Because at that point, it's too late. The early adopters are long gone, and they're looking for people to buy in so they can cash out.
Oh, yeah, that's with any stock. But, yeah, definitely AI is, of course. Anything to add there, Josh?
Throw it to Daniel.
Daniel.
Okay, so So the reason we brought this up is that OpenAI is building a $1 trillion data center in Texas, which one of us may know a lot about. And NVIDIA plans to invest $100 billion in OpenAI, which is, this nice little like self-fulfilling prophecy of they'll get a bunch of money back.
And don't forget Oracle.
Yes, they're involved in that too. So it's a nice little throuple they got going on.
Google Meta.
And when you back into these numbers, this is not my math, but I was reading that.
I will check your figures though.
Companies like OpenAI would need to 100x their profits to pay for a project like this in the next 5 years, which, obviously parallels the things like that in 2000. And so, I'm not saying that by any means this is like I definitely think this is a bubble. And I'm not saying that by any means that this is the top of the bubble. The top of the bubble could be like 5 to 8 years from now, right? As the apes like to say, I'll steal a quote from Darin, is that the market can stay retarded longer than I can stay solvent. So
I never said that.
I mean, come on, dude. Your community is all over that
on record.
Hey, it's not my quote. I'm just sharing a quote, okay? I wanted someone to help me square this circle of where this is so factually wrong, and we're going to make it out of this smoothly.
So you're saying speed is not going to keep up with the need, or the profit's not going to be there?
I'm saying the amount of growth and actual adoption that these company needs to justify their investment to make actual money is not there. And the amount, and I'm not saying they can't grow into it, but the speed in which they would need to get adoption just seems absolutely astronomical.
Okay.
Well, there are a couple of things that I want to point out in basically the data center space and in the AI space. We are currently switching what our primary source of electricity is. I'm not sure if you guys have realized that. They're literally using generators that are powered by natural gas to do this. So while everyone else is trying to use water and turbines and all this with waterfalls and all this to create electricity, they're saying that is old technology. So they're actually using natural gas, which means there's a huge demand on natural gas. I'm not sure if you guys also notice in your utilities, they're trying to get everyone to get electric stoves, electric this, electric that, to also get you off natural gas. Right? So with that paradigm shift, and basically because there are gas pipes under almost all the United States, having access to natural gas will allow these companies to be off grid and self-sustainable, and maybe even independent of the utilities across the country. So that's an entirely brand new market that doesn't currently exist today. Right? And so that's one side of it, right? The other side of it is as basically we're pulling these things in, Texas definitely stands to gain a lot from it because they do have lots of oil, they do have lots of gas, they do have lots of people. Did you know they have their own power grid? They're completely separated from the rest of the United States. So
didn't it not do too well a few years ago?
Yeah, that bit them in the ass.
Like it got a little chilly there, and then it just shut down.
Yeah, but in the same time, they refused that help because basically in doing so, it basically would have forced them to pay a whole lot more taxes and XYZ to literally just connect to their neighbor, right? But in that same breath, we are migrating from coal as power. We're migrating from water as power. We're switching to natural gas, and basically natural gas becomes the new black gold that's basically powering these data centers, right? And while a lot of people are skeptical that AI will be able to keep up, are skeptical that there will be a need, just like all of these companies that are currently, all of them, every single one of them, the top 8, they're all on-grid data centers. Imagine a world where they were all on off-grid data centers, so that way they can actually support the population. And basically, that's what's the strain on the grid currently, is that all these data centers and the compute power and stuff that's on, if they shift to an off-grid option, that will literally allow these power companies to upgrade their infrastructure and then also switch. So there's an entire, I mean, it may be $1 trillion, multiple $1 trillion market for this new technology. And it's not that it's new, it's just that it's alternative to what is currently mainstream. And so
all I heard was buy the picks and shovels. Don't buy the AI.
Yeah, absolutely. You're absolutely right.
So to keep up with the profits, to stay ahead, which is one of the things you mentioned there, then it is from the profits of the natural gas and but also, I mean, throw in there the fact that we still have a Congress and we still have many more bills that are coming. And I can guarantee you any shortfall that might be there, Congress will raise that money and throw it at these companies so that they will never not have money to do what you're saying, 100 times their profits to do what they want to do. So I know good and well, Republicans and Democrats will get together. Some will like bad cop, some will like good cop, but they will do another huge bill that our great-grandchildren will be paying for. So there you go.
Yep, and drill, baby, drill.
That's
Josh
right.
raised his eyebrows.
All right, let's well, first let's do the
Hold on. Let's get Josh's opinion. He raised his eyebrows.
He did.
No, I was just gonna mean, like, I think, I don't know, I guess the point that you were trying to make is, like, how are they going to recoup that $100 billion or that 100x investment? Like, where is that money going to come from? And I was just going to go, I guess, a much simpler way. I mean, you think about, Uber, Amazon, companies like that just from a pure growth speculative style company. Right now, you pay what? It's like, you can get ChatGPT for free. If you want to upgrade, it's like $20. I don't remember, like, when we were in college, or when I was in college, y'all are different age, but when I was in college, you get an Uber from downtown back to the university for like $7. Now that's going to be a $50-something ride, depending on what time you go. So all they're going to do is scale that subscription model, and they're just going to wait until everybody's so ingrained in that ecosystem that it just seems like, it's just like a Netflix or a Hulu or something where you don't even think about it. It's a necessary, almost a seemingly necessary part of your life, because you can't, and especially something as useful as AI is intended to be, or will be, or is mapped out to be, it's going to be kind of like an internet. It's almost going to be a utility. You can't go anywhere without the assistance of some sort of AI, and the companies aren't going to pay for it. So, you might have a company, your employer might pay for something like that, but more than likely, it's going to be another, $50 subscription that you have. And that's on the low side that you just have to have, because,
have you seen ChatGPT's new price?
Huh?
Have you seen ChatGPT's new price for the enterprise edition?
The
version 5, $200 a month.
200, yeah.
Well, that's for the pro plan.
Yeah, that's the max.
Yeah,
that's the
and
max.
have you seen ChatGPT version 5 without that pro plan? 4. Stay on 4. That's all I gotta say.
Yeah.
It's going to be your personal assistant. That was one of the things. It's going to be more like your personal assistant, like Hey Siri, that will anticipate your needs. And then down the road, I guess we'll have neural links inside of our head, so that basically robots run everything for us.
And they're mining the data from those AI bots and selling that data, right? For your preferences, your XYZ.
Yep, of course.
So
they've just been doing it different ways.
Any service that's free, you are the product.
Yep. And they are getting, as far as monetization, that's what we're talking about here, that they are starting to charge more and more here and there, and they will find the market, just like anything else, what will people pay versus what they want, and then they'll get right into that little area. But you'll still have the rich holding up these companies because they will pay whatever price to have whatever the latest thing is. And then on top of that, the companies will have to do it to be competitive. So, and then eventually the other 80% of us will be like, man, should I get food this week or have AI? All right. You know me, I'll throw stuff in controversial. All right. Yeah,
I mean,
I knew I could get Royce to look on that.
I mean, people go hungry and have to pay their rent, pay their cell phone bills. Like, it happens.
That's right. That's true. Yes. And car notes, by the way, which we could talk about the delinquency in cars and all that stuff. But I'm just saying that they have to get the latest car, and then they find out they shouldn't have. Especially with the buy now, pay later. But that's a whole nother thing we could talk about. But let's speaking of black swans, I see you, Josh, Mr. Banker. So let's move on though. We do need to wrap this up soon, and it is time for Royce to talk about. Let me go ahead and pull the screen up. Yeah, we've got crayons and charts after the bell with Royce Wells. What do you have for us this week?
Let's see. We're going to talk about Coca-Cola one more time. And remember, guys, I always draw these arrows before they happen, right? So, I mean, that guy, he wasn't so good, but that guy basically trying to attempt it again. Yeah, Coca-Cola went under roughly in May on our biggest band on our chart. And this is a 2-hour chart. So, I mean, that's a lot of time for a 2-hour chart and a lot of candles. So if you expand it out, you can see there are actually candles behind all that. So what's going to happen now? I am expecting Coca-Cola to continue its rise. It's made room. So the line that's up there, that's the mean line of the next smaller band. And it's pulling away from the danger zone and going to try to make a run for it. So Coca-Cola, once it gets above 123, look out above, not below. I'm expecting that guy to kind of make a big deal and make it maybe all the way up to 183 before we get to the end of the year. That's it. Enjoy that. That's my snippet.
Yeah, I mean, isn't that where it was hanging out at the beginning of the year? It's going to at least get back to that point, I think.
No, it's never been that high. About 138.
Maybe it was. Yeah.
And that's actually 2 years ago.
What was right before that? I don't know. That's true. The beginning of the year, I do know that there was a big deal about people not paying for premium snacks and whatever whatever narrative they came up with before they took it down. And so now we're pulling back up there, it looks like. So yeah, okay, cool. That's Coke.
All the news.
And that was After the Bell, Crayons in Charge with Royce Wells. And now, should we even talk about this last little segment here about the bet and everything?
Absolutely. You know why? Because I like Josh. I vote for Josh.
A fellow eight.
All right. So I'm going to pull up the scoreboard, and you will see that we have a three-peat. He's done it again. Josh has won 3 in a row. I can say the Apes have won 3 in a row, which means absolutely no contribution from me. We've got Josh at 4, Royce at 1, and Daniel and I shouldn't participate anymore. In fact, we can't even use.
To be fair, I always have to pick last. So, right? Darin, like you have less of an excuse.
I don't have an excuse. I will say though that I was there up until the last minute on this one once again and got smacked in the face at the last minute. So, and Josh loved it. I think he loved it even more, the fact that it was the last minute, just ticked right up to where he needed it to be.
It was pretty satisfying.
Yeah, I've learned not to celebrate early. That's for sure. In poker and in this. No. All right. Because the river sucks. That's pretty much what the equivalent of a river card is what that was. So, Josh, congratulations. But you also need to now, you are tasked with what are we going to go to next?
Ooh, I got an interesting one. Let's go, since we're on the quantum subject, let's go ion Q.
As in keep your eye on the Q? Oh, no.
This chart is very spicy.
What's the symbol?
It's spicy to me. It's
ion Q.
INQ?
IONQ.
This was the first stock I ever had a cash secured put on. It got me like 20% in like 2 weeks.
Yeah.
Nice.
It's so volatile.
Love it. So I'm going to go up to the daily time frame, and I'm going to bring on our dash indicator because we like dash. Dash is good. Dash 3. All right. Looking at this guy. It has a nice oof. Yeah, that's crazy range. That's like a $55 to $80 range.
Yeah, it's had some volatility in the last week. You can do you can try D-Wave. It's QBTS. Should have
You don't want to do the huge range.
It could be a little bit more of a narrow channel. We'll see. Both of the charts to me are really intriguing. Because if you zoom out, they're right on the edge of probability. But if you zoom in.
So now I'm going to go down to lower time frames to see if we can find and cherry pick some things.
Do you see?
Okay. Yeah. I also still have an opinion about this, but this is me knowing my charts. Let's see. Looking around. Finding things to play with.
Okay, which one do you like better?
This one has a tighter range, so that's about a $5 range, almost $6 range. So probably this one. So that means each person got about $1.50. That makes it a little bit more competitive. The other one, yes, $5, $6. That means it has to really keep up its volatility for anyone to get there.
Let's just do D-Wave. Let's see. Like you said, that's a little bit of a tighter channel. So
tighter channel. I like that.
Like 22.
Ooh, love that too.
23, 28.
23.
22, 28. 20. Oh well.
I love doing this.
This is when you gotta watch him. This is when you gotta watch him closely.
So which one is it, boys? Which one is it? Down or up?
Yeah, I thought you might like this one.
Oh yeah, this is beautiful. I'm gonna do one more thing just to be evil. Okay, there's that, and there's that. Okay.
Yeah. Uh-huh.
All right. Actually, to be super evil, one sec. I'm gonna add one more. Add that guy on. Okay. Versus. Okay. Love it. Okay. I have my opinion now. What?
All right, Josh.
All right, so just give me the range. Or give me the...
It's still 23 to 28.
Yeah, we need a range.
23 to 28. Okay. Someone else math that, because that's a...
All right.
23, 28?
Yeah, like a...
$5, $1.25 each.
Divided by 4, $1.25 a piece.
No.
So that means 23 to 24.25, 24.25 to 25.50, 25.50 to 26.75, and then 26.75 to 28.
I want the 25.50 to 26.75.
Okay. And who are you going to select next?
Yeah, that's also a good question. Do I shake it up and go Daniel, or
pressure would be on?
Yeah, let's do that. Let's spice things up a little bit.
All right, I'm gonna go below Josh.
All right, so they're tying up the middle. So now,
Crazy.
Come on, Darin. I'm about to call you Darius. Come on, Darin. Up or down?
Right. I'm not that smart. I wanted to do Daniels. I was going to go right in the middle again, and then probably have Josh be all upset because I'm taking the middle. But man. I'm going to have to go above.
There he is.
Top half.
Okay, good.
Yep.
Excellent. Love it.
And
Now,
Royce
I'm stuck with the bottom channel.
is 24.25 below.
And yeah, I'm okay with that number. All right.
Like that. This is the fun. Like this is a fun chart. I'm really glad I found it because it honestly could go a few different ways.
Yep. It needs to accelerate to expand and go higher.
Alrighty,
It needs to slow down to fall.
Right.
So we'll see you guys next week on After the Bell.
All right. So, let's go ahead and wrap this puppy up. Let's see what happens with all these reports that come between now and next Wednesday. I know there's some juicy ones the rest of this week. We also have the government being shut down and whatever may happen with all of that going on. And so there's a lot of juicy stuff that can happen between now and next Wednesday. And who knows? But even our company, there could be juicy stuff happening between now and next Wednesday. Who knows? It's a liquid moving target. And we will see what's up next Wednesday on After the Bell with Arbitrage Trade. Say bye.
Hasta la pasta.
Finally, everybody else said bye. All right. Bye.